Canada's proposed Stablecoin Act marks the biggest shift in digital asset policy since 2019. It promises to bring some clarity to cryptocurrency's murky waters. But what does this mean for you heading into 2026 in your portfolio? For more on this, we're joined by Adam Garetson, leader of the Blockchain and Digital Assets Group and a partner at Gowling WLG. And thank you, as always, Adam, for joining us.
Thank you very much. It's great to be back.
Where do we stand heading into 2020? I wasn't sure what year it was. Heading into 2026, what's different for stablecoins compared to when we walked into 2025?
Yeah, thanks. So we've seen a marked shift in stablecoin legislation over the course of the year, primarily in November with the release of the draft Stablecoin Act. So the Stablecoin Act was released by the federal government as part of its budget efforts towards the end of the year. Really what the Stablecoin Act does is set out a framework for issuers of the asset. So for those who may not know, stablecoins are a digital asset that's based on blockchain technology. But unlike Bitcoin and other speculative digital assets, stablecoins are designed to hold their value effectively as one-to-one with the Canadian dollar. So the idea behind a stablecoin is that it's not a speculative investment vehicle, rather it's a store of value that really functions more like cash. In 2025 and prior thereto, we've had regulation with respect to stablecoins, primarily from Canadian securities regulators. So this Stablecoin Act is really the first significant move by the federal government to bring Canada deeper into the global digital markets.
And do we know what it will hope to do? What does it hope to attempt to do? I saw that it wants to be pegged to the bank. Stablecoins have to be backed by reserves. That we heard that from the governor, Tiff Macklem, the Bank of Canada governor, yesterday, talking about that. Is that where they're heading with it?
Yeah, that's exactly right. So the whole idea is you've got a digital representation of a dollar that lives in the virtual digital world, right? And for that virtual dollar to be stable, it needs to be backed by real world assets. So that's what the legislation does. It gives regulatory oversight of stablecoin issuers to the Bank of Canada. And it effectively allows issuers to issue stablecoins on blockchains, but requires them to keep reserve assets segregated and with custodians like financial institutions. And the reserves have to be either in cash or other forms of high quality liquid assets.
Now, with it linked, if it ends up linked to the dollar, which is more than likely, what's the benefit then for people investing? Why not just stay with the dollar?
Yeah, so stablecoins allow for participation in digital markets. There's a couple of primary use cases. One we've seen already, and that is a stable trading pair with respect to other forms of digital assets like Bitcoin or other cryptocurrencies. We're going to start seeing a lot more assets come on to blockchain technology, so having stablecoins as a trading pair is very valuable, especially in Canadian dollars. What we've been seeing the emergence of globally is stablecoins used as a form of payment, whether that's business to business, B2B payments, or B2C payments as well. We also see stablecoins more and more used in global remittance transactions. So sending dollars, sending the equivalent value of the Canadian dollar around the world. What the technology really allows for is instantaneous settlement or near instantaneous settlement, 24/7, always on technology that's interoperable all around the world. Traditional payment rails just don't work like that right now.
And the U.S. brought in the Genius Act earlier this year. What are we seeing down there? How are things unfolding?
Yeah, so the Genius Act is effectively the Stablecoin Act that was passed in the U.S. earlier this year. We expect it to come into force in 2027. There have been Stablecoin Act equivalents that have been cropping up all over the world over the past couple of years. So this really isn't a U.S.-only phenomenon. We've seen parallel legislation in the EU under the Markets in Crypto Asset or MiCA legislation, as well as in Hong Kong and multiple other jurisdictions. So what we're seeing now in the U.S. is effectively a ramp-up period where financial institutions, fintechs, corporates, any sort of adopters of these stablecoins are really getting prepared for the digital asset legislation under the Genius Act to come into force so that stablecoins can be issued legally under that act in the US. We're seeing similar trends in other jurisdictions, and that's effectively what's happening right now in the Canadian market as well.
And moving ahead, what will be the allure of being linked to the Canadian dollar?
So you got to imagine that global money markets exist right now, whether they're money market funds, FX markets, etc. As more and more trading activity payments activity, et cetera, gets migrated onto blockchain technology, it'll be important for the Canadian dollar to play a role. We also see a lot of different ways that a stablecoin can be built, where the assets can be held, and how the stablecoin can derive trust. We think there's a lot of value that can be derived from the Canadian financial system to have a Canadian dollar-denominated stablecoin available in global digital markets. Given the asset class is so new, having a very soon-to-market, not quite first mover, but rapid follower advantage can be very beneficial to Canadian economic sovereignty.
And going into 2026, investors, what should they be aware of? What should they be doing? Should they be waiting or should they be being more proactive?
My recommendation is to be proactive, talk to counsel, think about your governance and regulatory frameworks that you're implementing, think about your technology and operations. We're going to start seeing more and more stable coins come to market. We're going to see more and more merchants and consumers start adopting these things. So getting out in front of it now, understanding the frameworks, the risk parameters, the integration strategy, and your legal and regulatory compliance obligations will go a long way to be prepared as we see more and more legislation roll out globally, more and more regulations be developed by the Bank of Canada and the federal government to really spell out how stablecoins are going to operate in Canada over the next year.
Okay, we're going to have to wrap it up there, but Adam, thanks very much for joining us.
My pleasure. Thanks for having me.
Adam Garetson is leader of the Blockchain and Digital Assets Group and partner at Gowling WLG.